Many Britons have moved to Australia, myself included, and often retain assets originally in the UK, but they often think they don't need to worry about UK tax issues anymore. Conversely, many Australians often acquire assets in the UK or live there, and similar issues can apply. We consider inheritance tax and UK estate planning. First of all, what is inheritance tax and when does it apply? The UK imposes inheritance tax according to your domicile position. You're born with a domicile of origin, which follows that of your father if your parents were married at the time of your birth. But you can acquire what's called a domicile of choice. For example, if you move to Australia and acquire the intention to reside here permanently and indefinitely, noting that it's state-based. For inheritance tax purposes, this is very important, as if you're still considered domiciled in the UK by the UK tax authorities, they will impose inheritance tax on your worldwide estate. Whereas if you're accepted to be domiciled, for example, in New South Wales, then you will only be subject to inheritance tax on your UK assets. The difference is significant because inheritance tax is charged at 40% above a nil rate band of £325,000. There are certain exemptions for transfers between spouses and a small nil rate band exemption as well for your home. If you're subject to inheritance tax, what can you do? There are certain strategies to reduce the estate that's subject to inheritance tax, for example, making outright gifts to family members or lifetime giving. If we consider that you've acquired a clear domicile of choice in New South Wales, we may also recommend preparing what's called a statutory declaration of domicile, which is used as formal evidence if HMRC were ever to dispute your domicile status after your death. What to do about UK estate planning? So fortunately, the UK and Australia will recognise wills prepared in each country, so it's possible to have one will covering both countries. But it's often advised, particularly where you have significant assets in both countries, to have separate wills, because this means you can get a grant of probate obtained in both countries at the same time, rather than having to get one in one country and then get that resealed in the other, which can take more time and expense. Even if you can get by with a worldwide Australian or UK will, it's also important to have local incapacity documents prepared, as they will only be recognised in each country. How can Hall Wilcox help you? We regularly deal with clients who are originally from the UK or with assets in the UK, so although we can't provide UK tax advice, we're very aware of the issues and work with advisors in the UK where required to make sure that your estate planning is appropriately structured from an Australian and UK tax and estate planning perspective.